What's up, Bitcoin Bulletin fam? Get ready for a rapid-fire update that's going to shake up your portfolio. We're diving straight into a monumental shift in Bitcoin's supply structure, with analyst Maartunn revealing that the big whale addresses holding over 1,000 BTC are rapidly declining, while those holding between 100 and 1,000 BTC are on the rise. This big fish down, medium players up dynamic is happening as Bitcoin's price is testing that critical $113,000 resistance level, hinting at a potential breakout fueled by institutional flows and upcoming Fed decisions. Could this signal a more mature bull market? But hold on, because the bullish momentum isn't without its drama. We're seeing Bitcoin bulls on edge as the price struggles to maintain its grip above $112,000. After an initial recovery, bears are lurking, and a move below $110,800 could signal another sharp decline. We'll break down the key support and resistance levels that traders are watching like hawks right now. Now get ready for some huge news out of Japan. Metaplanet, the company already dubbed Japan's MicroStrategy, is planning an absolutely massive $1.6 billion share sale. Their audacious goal? To load up on even more Bitcoin, aiming for a staggering 210,000 BTC, and to expand their crypto income strategies. We'll dive into the details of this colossal capital raise and what it means for their holdings. And finally, for the chart watchers, Bitcoin just flashed a major bullish signal. Analyst Omkar Godbol is reporting that Bitcoin has triggered a bullish head and shoulders pattern, potentially signaling the end of its recent pullback and the resumption of the broader rally. We're talking about potential price targets that could blow your mind. You absolutely need to know what's happening. So, if you want to stay ahead of the curve, make sure you're subscribed, hit that notification bell, and let us know your thoughts in the comments below. Whales are draining, medium players are gaining. Bitcoin's price is making waves, testing that pivotal $113,000 resistance and showing signs of renewed bullish energy after weeks of mixed sentiment. This surge comes as altcoins are also strengthening, suggesting the entire crypto market is gearing up for a significant move. The next few days are absolutely critical, especially with the U.S. Federal Reserve meeting on the horizon. Any hint of an interest rate cut could supercharge liquidity into Bitcoin and other risk assets. But the real story here is a dramatic shift in who's holding the Bitcoin. Top analyst Maartunn has revealed a fascinating trend. The number of addresses holding over 1,000 BTC has been shrinking rapidly this cycle. Simultaneously, addresses holding between 100 and 1,000 BTC are on the rise. This isn't just a minor change, it's a clear redistribution of supply. It appears that the massive whales are trimming their positions, while a growing number of medium players, many of whom are linked to institutional ETF custody wallets, are increasing their stakes. Maartunn calls this the big fish down, medium players up dynamic, and it highlights a fundamental evolution in Bitcoin's ownership. Instead of concentrated holdings in a few hands, which can lead to volatile price swings, the supply is spreading out. This creates a more resilient and liquid market, less susceptible to sudden shocks from single large trades. The involvement of ETF custody wallets is particularly important, signifying a move towards more transparent, regulated, and demand-driven holding patterns, integrating Bitcoin more closely with traditional finance. This structural change is a departure from previous cycles. Institutional adoption, from U.S. ETFs to treasury strategies in places like Japan, is now dictating how Bitcoin supply is absorbed post-rally. We're seeing less of the chaotic peaks and sharp crashes of the past, and more extended consolidation and segmented distribution phases. This evolution suggests that long-term sustainability is increasingly taking precedence over speculative fervor, potentially ushering in a more mature and sustainable bull market for Bitcoin. Don't go anywhere, because the technicals are even more fascinating. Next up, we'll dive into whether Bitcoin's bulls are truly in control, or if a sharp decline is looming. Bitcoin bulls on edge is another sharp decline coming. Bitcoin's price is in a critical battleground, struggling to maintain momentum above the $112,000 mark. After an initial recovery, wave from the $110,100 zone, pushing past key resistance levels at $110,800 and $111,500. The bulls managed to break above $112,500 and even $113,000. However, the bears have shown their teeth near the $113,200 zone, preventing further gains and forcing a fresh bearish reaction that pushed the price back below $112,000, with a low formed at $110,820. Currently, Bitcoin is consolidating these losses, trading below $111,500 and the 100-hour simple moving average. A bullish trend line is forming on the hourly chart, offering support around $111,000. Immediate resistance looms near $111,700, with the first key resistance level identified at $112,000, which also aligns with the 50% Fibonacci retracement of the recent decline from the $113,200 swing high. A decisive close above $112,300, which represents the 61.8% Fibonacci retracement, could propel Bitcoin towards the $113,200 resistance and potentially higher, aiming for $114,200 and the $115,000 target. However, the outlook remains precarious. Failure to overcome the $112,300 resistance zone could trigger a fresh decline. Immediate support rests at the $111,000 trend line, followed by the major support at $110,800. Should these levels falter, the price could plummet towards the $110,200 zone and potentially test the significant $108,800 support, with the ultimate safety net at $107,500. Technical indicators like the hourly MACD losing momentum in the bullish zone and the RSI dipping below 50 suggest caution. These technical levels are crucial, but what about the companies betting big on Bitcoin? Next, we're revealing a Japanese tech giant's audacious plan to raise billions for Bitcoin acquisition. Metaplanet's $1.6 billion Bitcoin bonanza. Get ready for a move that echoes MicroStrategy's bold Bitcoin strategy. Metaplanet, a prominent Japan-listed company, has just announced plans for a monumental overseas share sale, aiming to raise a staggering 212.9 billion yen, which is approximately $1.6 billion USD. The primary objective: to significantly expand its Bitcoin holdings and bolster its Bitcoin-related income strategies, including options trading. This massive capital raise involves issuing 385 million new shares at Y553 per share, which will increase the company's total outstanding shares to about 1.14 billion. This is one of the largest fundraising efforts by a Japanese company specifically earmarked for Bitcoin investment. Metaplanet isn't just dabbling. They've set an incredibly ambitious long-term goal to acquire up to 210,000 Bitcoins, signaling profound faith in Bitcoin's future as a store of value and a key part of their corporate treasury. This isn't entirely out of the blue. Just days before this announcement, Metaplanet had already purchased 136 Bitcoins at an average price of $111,783, bringing their total holdings to over 20,136 BTC, valued at more than $2.05 billion. They had previously announced plans to raise around $881 million for further Bitcoin purchases and related financial activities. This aggressive accumulation strategy mirrors that of MicroStrategy, solidifying Metaplanet's position as a major corporate Bitcoin holder in Japan and potentially inspiring other global firms. The market is watching closely, and this strategy could be a bellwether for increased institutional interest from Japanese companies in digital assets. Metaplanet's continued share sales and Bitcoin accumulation underscore a strong belief in Bitcoin's long-term prospects and its role as a hedge against inflation, aligning with global institutional trends. Will this massive corporate buying spree push prices higher? Stay tuned as we break down the latest chart pattern that's got Bitcoin analysts buzzing with bullish predictions. Bitcoin bullish head and shoulders pattern triggered. In a move that has chart analysts buzzing, Bitcoin has just confirmed a bullish inverse head and shoulders pattern, following a softer-than-expected US PPI report that pushed its price past $113,600. This breakout is being interpreted as a significant signal, potentially marking the end of the recent pullback from record highs above $124,000 and signaling the resumption of the broader rally. Using the measured move technique, which involves adding the distance between the pattern's low and the breakout point to the breakout level itself, analysts are projecting Bitcoin could reach nearly $120,000. This bullish outlook is further supported by the ascending 50, 100, and 200-hour simple moving averages, which indicate strengthening upward momentum. Adding to the positive sentiment, the daily chart's MACD histogram crossing above zero provides additional confirmation of a positive shift in market sentiment. While the path forward looks bright, bulls might encounter resistance near the closely watched 50-day simple moving average, currently sitting around $114,700. On the downside, the recent higher low established around $110,000 will serve as a key support level for bears to challenge. The interplay between these resistance and support levels will be critical in determining the extent of the next upward move. That's all the news you need to know for today. But before you go, let's do a super quick recap of everything we covered. And that's a wrap. We saw Bitcoin's supply shift from giants to medium holders. Bulls are on edge with price action around $112,000. Metaplanet is planning a massive $1.6 billion share sale to buy Bitcoin, and a bullish head and shoulders pattern has triggered on the charts. If you found this information valuable, hit that like button, subscribe to Bitcoin Bulletin for more insights, ring that notification bell so you never miss an update, and share your thoughts in the comments. Don't forget to follow us on all social media platforms for real-time updates.